So, I want to explain to you my approach to the stock market using this simple analogy of a fruit basket. Now, a lot of people do not understand what is my approach. So, I'm trying to simplify this for you. Okay, when I reject a stock, some people get confused as to why I have rejected the stock in spite of the fact that it has decent fundamentals. Let me give you an example. Okay, let us say I give you this fruit basket and I ask you to pick an orange from this fruit basket. Now tell me, if I ask you to do that, what will you look for? Will you look for an apple? No. Will you look for a pineapple? No. Will you look for some other fruit? No. What will you look for? You will look for an orange, right? Because I told you to take an orange out of the basket because you know what an orange looks like. Similarly, I have the blueprint of a leading stock in my mind. I have the criteria set in my mind. The stock market is like this fruit basket for me. I am looking for a specific kind of a stock which meets my criteria. And if I find that stock in that fruit basket, I'm going to pick that stock up. It's as simple as that. Now, if I give you a fruit basket and I ask you to pick an orange out of that fruit basket, and let's say the fruit basket does not contain the orange. It contains other fruits, but it does not contain the orange. What will you do? You will say that there is no orange in the basket, so I am not picking anything. Similarly, in the stock market, I am looking for a specific kind of a stock. I already know what I am looking for. And if I don't see what I am looking for, I don't do anything. I just sit on cash. I just relax. It's as simple as that. Okay. So you have to pick oranges. So first you have to define for yourself what are you looking for. Just like you know how does an orange look for. The orange is color, orange in color, right? Very simple. So you know the criteria to pick an orange out of a fruit basket. So this is a simple example that I have used to explain to you what is my approach. I am looking for a specific kind of a stock. Okay. Now, let me give you an example of this. So, recently I made a video on Bluestar. Okay. Because one of my YouTube subscribers said to me that Rohit, Bluestar has hit an all time high. Why have you rejected the stock? Okay. So, let me show you that. So, this is our YouTube channel. Okay, if you scroll down, there is this video. See, 12 days ago, I had published this video, Blue Star rejected. If I click on this, let us see when was it published. So if I go here, this was published on 2nd of January 2025. And as I record this video, this is 14th of January 2025. Okay. So 12 days ago, I had published this video. Now let's look at Blue Star stock. Okay. So I will write Blue Star here. So have a look at this. I will tell you when I had published the video. Okay. Yeah. This is what I saw when I published the video. So first, I want you to go to that video and watch that video and try to understand why I rejected the stock when there was this mother baby candle formation. The price is above the blue, the green, and the red. All the three moving averages are sloping up. It's a nice base formation. The yellow line is in the green zone. All of the criteria that I am looking for was there here. So then why did I reject the stock? Why did I not catch this breakout? Okay. So if you go to Market Smith, I will give you, you can watch that video to understand the reason, but I will give you the reason here. So have a look at this. Why is Blue Star not showing here? Yeah, here. So have a look at this. I will click on consolidated. Okay. See, from 2023 to 2024, the EPS has actually declined. What is the characteristic of a leading stock? A leading stock normally shows some positive growth in annual EPS for the past 3 years. So, this reason alone was enough for me to reject the stock. Number two, this number, the latest quarter EPS growth should be minimum 40%. If it is not 40%, if it is less than 40%, in the latest 3 quarters, it should be accelerating. None of those two conditions are satisfied. This reason alone is more than enough for me to reject the stock. This number, the latest quarter sales growth, should be minimum 25%. If not 25%, if it is less than 25%, then the sales growth should be accelerating for the latest 3 quarters. None of these three conditions are satisfied here. Why should I even look at the stock? It is as simple as that. Just like I told you, in the fruit basket, I am looking for the orange, and this stock does not meet the criteria that I am looking for. It is as simple as that. So I just ignore the stock. I don't want to be a party to this stock, right? There is another kind of a stock which meets my criteria. If I find that in that fruit basket, I am going to pick that stock. As simple as that. That's point number one. Point number two, look at market conditions. Okay, currently it shows confirmed uptrend, but this uptrend was not sustainable because the price was below the 50-day moving average. Nifty was below the 50-day moving average, the 150-day and the 200-day. So just because it says confirmed uptrend doesn't mean that I take positions. I also look at the moving averages on the Nifty. Okay. It's one thing to see confirmed uptrend here. It's another question you have to ask is, how sustainable is that confirmed uptrend? Just looking at this green color and just putting your money in the stock market, that does not work. You have to ask that follow-up question. How sustainable is that? And in one of my videos on swing trading, I explained to you the difference between this confirmed uptrend and this confirmed uptrend. During this period, the Nifty was above the 50-day, the 50-day was above the 150-day, and the 150-day was above the 200-day. In this case, the Nifty is below all the three moving averages, plus the 50-day simple moving average has gone below the 150-day. So there is a huge difference between this uptrend and this uptrend. Now, why does this show an uptrend? I have made a separate video on that just few days ago. You can watch that video. Okay. The point I'm trying to make here is, in a downtrend, obviously we are not taking swing trades, we are not taking positional trades. So now I am left with three options. I consider both of these options as weak market condition. I consider this option as strong market condition. In a strong market condition, my criteria is going to be loose, or my criteria is going to be more lenient. In a weak market condition, my criteria is going to be more strict. Now, although this shows confirmed uptrend, we know that confirmed uptrend is not sustainable. So I consider that as a weak market condition. Now you tell me, in a weak market condition, my criteria needs to be more strict, right? The weaker the market condition, the more is the risk, and the more is the risk, the stricter should be my criteria. So which means, if my conditions are not getting satisfied here, I am going to outright reject the stock. And by the way, look what happened after that. I rejected the stock here. Look what happened here. See, on this day I rejected the stock. Check where the price is right now. If I had bought the stock at the yellow line, my stop loss would have been long hit. And by the way, there is a falling window between these two candles, which is even more dangerous. So the low of this candle is 1960. The high of this candle is 1954. So there is a price gap between, that's a downside gap between these two candles. That's a falling window. Very, very dangerous. Recently, I made a video on falling window, how you should stay away from a falling window. Okay. So now the question is, was I able to predict this? Okay. No, the answer is no. See, I did not anticipate this to happen. Okay. After this, the stock could have doubled. See, I don't care after I reject a stock. I don't care whether it goes up or whether it goes down. It simply doesn't meet my criteria. I am out of it. It is as simple as that. Now, you see what has happened after I rejected the stock. That means my decision was correct. Now, why do you think this must have happened? Because The stock does not show the characteristics of a leader. This could be one reason. I am not saying that was the only reason. Weak market conditions could be a reason the stock has gone down. Sometimes a good stock can go down simply because of weak market condition. There is nothing wrong with the company. My argument is, since this stock does not show the characteristics of a leader, it is a vulnerable stock. Okay, it is a stock that is likely to fall, which is exactly what you see on this chart. If I had bought that day, you see what has happened. Okay, so simply by rejecting stock, I am rejecting a stock, I am saving myself a lot of money, loss, and a lot of headache. Okay, so remember this lesson: the weaker the market condition, the more strict will be my criteria. The stronger the market condition, the more lenient my criteria will be. That is the lesson that I wanted to convey to you through this video. So, Bluestar is a very good example of rejecting a stock and then going back and checking what happened after I have rejected the stock. So, this gives me confidence that the decisions that I am making are working, right? This is a very good way of trade journaling. Trade journaling does not mean that you count your profits and losses. No, that is not trade journaling. Trade journaling means you have to write down the decision that you took. Okay, and then few days later or a few weeks or months later, go back and check whether your decision was right or not. Now, in a trade that you take, that's very easy to do because you know whether you made money or not. But what if there is a trade that you did not take? Do you go back and check the stocks that you have rejected? If not, then you better start doing that, because rejecting stocks is a far more important skill than selecting stocks. For every one stock that I select, I am personally rejecting 100 stocks. Please remember that. Okay. Thank you so much for your time. And remember to pick oranges only. Okay. Thank you so much.